Wellington Nanos, Canada Consumer.
Okay, good afternoon, folks. Good afternoon. Welcome to the Monday market analysis live stream, which we do every Monday. I hope you all had a good weekend, licking your wounds from the stock market sell-off from last week. Pretty brutal stuff, wasn't it? Pretty brutal stuff. Okay, before I get into the stream, we've got a competition running. I want to just announce this now because basically you got 10 minutes to get your entry in. Okay, so we are going to close the entries in it's about 9 minutes from now. It's your chance to win a $12,500 challenge account, assessment account in the pot firm. And all you need to do is tell me where you think gold will be at 150, which is 50 minutes from now. Okay, and the two that are closest will have a chance, will actually win $12,500 assessment. Now in the chat, you'll see some forms that are going to be dropped in there over the next 10 minutes or so. So click on that. It's a Gleam form. You need to put in your email address, of course. Otherwise, we won't be able to email you the code and the winners and so forth. So make sure you put your valid email address in there. And then, of course, you will be in the competition. So it's guessing gold. We're going to be taking it basically from here. So gold at the moment, for example, is trading here on my TradingView platform. If you're trading with the DX, TradingView on top, all pretty much the same. It's trading at the moment is 3027. Okay, 27 spot 99. So if you go to the other decimal places, then obviously you'll be more accurate. If, obviously we're only giving two away, so the more accurate you are, the better it will be. So there really is no point putting your guesses in here. Ashisha, not interested. We won't be valid. They're not going to be valid. It's not going to be here on the chat. You need to put it on that Gleam form so that we can monitor them all, because obviously there's lots of people going to be entering and we're not going to be able to monitor them all just dropping in the chat. Of course, if you're watching on catch up, well, unfortunately, you have to come around next Monday, because we'll be doing this each and every Monday. We might shake up the competition a little bit. But basically, don't bother doing it on catch up because it won't be valid. But your call may still be charged, as they say. Well, maybe we're not making a call, it's all free. There you go. So yeah, welcome to the stream. You've basically got about 7 minutes to go on that, and then we'll close that down. Talking about gold, did anyone see my stream from last week? Okay. I tell you what, if you didn't see it, let me just run this by you. So this is the stream from last week. Oops, there is.
This is roughly drawn, but this gap here would take. This is roughly drawn, but this gap here would take.
Let me just take that. Here we go.
31.
This was quite amazing stuff. Now I'm not.
This is my target that I drew in for last week on gold.
There we go. Can we get to the end?
It's.
So this is basically the analysis from last week. Okay. Now I'm not saying I told you so, but I told you so. And the reason why I'm showing you, because obviously I make a few calls throughout the trading week, and some are right and some are wrong. I don't want anyone following my calls on what I think is going to happen by trading it. Of course, that'd be madness to take a call and expect to make money out of it, because at the end of the day, trading is all about getting it right over the long sort of big sample of trades. There's no one trade should make you or break you. It's not one trade. It's about what you do over the course of your year, if you like. And I get wrong trade calls, I get right trade calls. But I thought this was really, really fantastic, even though I say so myself.
Now this is roughly drawn, but this gap here would take gold up to 31.66.
31.66.
Target that I drew in for last week on gold, and it's looking as though it's well on its way. It's not so far away now. People were thinking I'm mad on Friday talking about potentially gold going up to these zones, but
31.66. I mean, it got up to, here we go, I called it around there. And the reason why I called this level was because of this extension. It's 100% extension markets, and you go back to this, and see if you can find other examples of it. There's a couple at the moment I'm looking at in oil this week. I'll talk about that in a moment. But you've got this sort of extension level. So we had this breakout, double top on the. Let's take it out to the daily here for a second. Okay, so we had this double top. It bounced off it there, bounced off it here, and then rolled back over. It dropped whatever it was there. It dropped sort of like a almost 4%. And then we had the move right back up to these highs up there at 30.57. This gap here, 100% extension, takes you up to where I drew it in a couple of weeks ago. We've been talking about it, 31.67. And I called it 31.66 because this is uncharted territory. We hadn't been up at this level before. So it's almost impossible to pick a level, technically, by looking back in the charts. You can use Fibonacci extensions and so forth. The 1618 extension is normally quite well respected. Not that I'm a massive Fibonacci user, but interestingly enough, it was almost exactly the 100% extension. And then once we touched it, it dropped like a rock. It dropped down from 31.66 down to 29.69. About a 6% drop from that very, very level. So very, very great call, I think, by myself. Guess how much money I made on that? Nothing. So I didn't trade it. So you'd be mad to have traded it just on the back of what I said, but it was quite a good target level to have in there. In fact, I was long gold, and I did sell out my gold positions before that. Before we got up there, in fact, before that weekend. So I took a nice profit on it, but didn't actually fulfill my target. I actually think gold's going up again, but we'll talk about that more when we get to the analysis. Right, you've got 2 minutes left for this competition. Okay, 2 minutes left to get your guesses in. I'm not sure, I can't see the Gleam form, but I might get told about it shortly, how many entrants we've had. But again, don't put the guess in here. It will not be counted. Okay, and you have got, as I say, just over 2 minutes to go. Yes, and please don't spam as well. Right, also this stream, we're going to do the usual analysis. I'm going to go through what basically was driving the markets last week. Then we'll talk about what's potentially going to be driving the markets this week. We'll get on to the charts and we'll have a look at some potential trade setups. I'll give you some views of what I think, some setups that I am looking at myself. This stream is going to be a giveaway stream. So I'm giving away $62,500 in assessments today. Free, absolutely free, over 5 different prizes. We've got 2 that are going on this gold call, which will close at in 52 minutes. But we're also going to be giving away 2 more free coupon drops. So at any time between now and the end of the stream, which should normally last about an hour, keep an eye on the chat because we'll drop a coupon code, and it's absolutely free. That coupon code will be valid for 2 people, 2 traders here in the room. Get that code in, get registered on the site, and then you get the you get an assessment account, 12,500 assessment account, absolutely free for doing absolutely nothing apart from showing up here. So keep an eye on the chat. Keep an eye on the chat. We'll be giving that away. I'm not doing it myself, so I will be surprised as much as anyone when it comes out. But so keep an eye on it. The coupon code will drop, and get that. Go to the site. The link will be in the description below. You can go straight to the site, the Funding Trading Plus site, and then you can sign up for the account there, and it's free. And we're also going to be giving away 2 times $12,500 at the end of the stream for those that are the most sort of engaged, if you like, engaged in this sort of hour analysis session. Anything that you want to talk about, as long as it's market related. I don't want to be talking about the weather really, but anything that's market related, any views you may have, anything you want me to look at, and so forth. Get engaged. Give yourself a chance to win a $12,500 assessment account. Okay, so we're closing this in about 3 seconds, and that has to close for that reason. Okay, so that has now closed. So your entries are in. Gold at the moment is 3028. What do I think personally? I would say higher. Momentum's with the longs at the moment. This is my little guess. It's only a guess, of course. I've got my analysis coming up on gold in a moment when we get onto the charts. But my guess would be, I would say, if it was me, I'll be going for 3045. That's just my guess. Of course, I don't qualify because I'm dishing out the prizes. I won't win anything. So mine is not valid. It's not going to be counted. But that would be my guess. Dashing says 3051 to 3060. Well, that's a good spread, but it's also not going to be counted because, of course, you're not in the on the gleam. It must, unless you put it there as well. Why is gold very volatile? Gold's very volatile. Well, gold. There's a number of reasons why gold is up where it is at the moment. Gold is basically showing some strength for a whole number of reasons. It's a hedge against inflation, and as you know, we've got. Let me just take that off. Sorry. Hang on, where do I take that off? I don't know what those coming up, do we? Let me just hide message. There we go. Inflation hedge. You've got a lot of central banks buying gold at the moment. I mean, gold had that sort of pullback last week. And often you'll see when, look, gold normally has been a great hedge against inflation. It's been a great hedge against uncertainty of the Trump tariffs. But one of the reasons why I think gold had the massive sell-off last week was because if you've seen what's been going on in the stock markets have been hemorrhaging all over the world. China opened up 10%. Well, China last night was 10% down. But stock markets have been hemorrhaging all over. We'll talk about that when we get onto the analysis and so forth. And you see, traders having to sell their long gold positions because they've been obviously sitting on some really nice profits. They're selling their gold positions to pay for the losses and their margin calls that they're getting on the stocks. So often you see, when you see that erratic, massive, quick, fast move in the stock market, you'll see gold come out in sympathy if indeed gold has been on a tear to the upside. We saw it, I can't remember what it was now, but it happened in Bitcoin recently. When I say recently, in the last 18 months or so, Bitcoin took a massive plunge, which was basically a result of people having to sell their Bitcoin position to pay for their losses, again, in the stock market fallout. I can't remember what it was, why the stock markets fell so quickly over that time, but it was basically a knock-on effect seen in Bitcoin as well. So some of these asset classes that have had a really good run get pulled back under the under their sort of selling to pay for losses scenario. Okay, so let's have a look here. Since the Chinese stocks have been going down, it's almost likely that they're sold to settle losses on the stocks. Yes, well, okay, well there you go. Azar. Oh, you said you're the same as me. Excellent. Yeah, well, I totally agree with you. Right. Okay. So let's have a look then at what we are going to be talking about today. As usual, this is purely for analysis purposes. It's not investment advice. It's not trading advice. It's meant to be just a bit of entertainment, bit of a giveaway, and also a bit of a thank you to the community for staying with us and what have you as well. It's not supposed to be investment advice. So do not trade on the back of what I say. I'm not here giving trade signals. Nothing about that. We're all grown ups in here, hopefully, and we can appreciate that. Okay, so last week's drivers. Let's just have a quick look at what was driving the markets last week before we get on to the analysis. I've got lots to talk about. I want to talk about gold. I want to talk about oil. I'm looking at the Japanese yen as well. We got lots to talk about, but let's just talk about what is happening in the markets. Well, the big thing that's happening in the markets clearly is what is it called? Liberation Day last Wednesday, where Trump put on all these tariffs across pretty much every country apart from Russia, maybe, because they've got obviously sanctions and all that and so forth. But tariffs 10% for the UK, 25% for Europe, 25% on auto. China, I think it was even higher, 35%, wasn't it? 34%, something like that. and now you're expecting some retaliatory action from China, and it's not over yet. But the stocks have been absolutely hemorrhaging value at the moment. We'll look at that again when we get onto the charts very shortly. Don't forget, stay tuned, keep an eye on the chat, get engaged. Your chance to win those assessment accounts. US non-farm payroll came in better than expected in terms of jobs created. More jobs, more people joined the workforce. Beat expectations. I think it came in at 200. Off my head, 268,000. Must have got that wrong. Something around those levels, but it was more than expected. But unemployment ticked up. Okay, unemployment ticked up, maybe as a result of the sort of tariff expectations. As I say, that's ticked up to about 4.1% from 4%. We had rates left unchanged in Australia as widely expected. The Australian currency was really under pressure last week, remains under a little bit of pressure as well this week. Again, why is it under pressure? Well, Australia is a commodity, and also the oil gold came down, but it's a commodity currency. Yeah. If countries are expanding and economies are expanding and growing and GDPs heading up, well, companies invest more in plant and machinery, and they need iron ore, they need copper and aluminium, and all of this comes out of Australia. So it's a commodity currency that tends to do well when global economies are expanding. When global economies are contracting, these commodity currencies tend to do worse. Rates were left unchanged, which was seen as a bit supportive of the Australian, because obviously the rates are on a downward path, and they may have to cut rates sooner rather than later now, with the sort of global recessions being talked about. But Australian dollar at the moment is under pressure. You think there would have been some support with the rates being left where they were, but not really. And employment came down in Canada. I think they lost 35,000 jobs from expected, up 10,000. So that was the real main movers. But quite frankly, it's all down to the stock markets, and there you go. So Agona says, "What's my view? What's my take on Trump tariffs? Slap long term." I really, I think this is. I mean, we know Trump is art of the deal, don't we? It's all about the art of the deal. Is this the worst case scenario? And then we'll see, maybe a pullback from it. I think tariffs are here to stay. I think personally that it's not good. I don't want to get slated here on YouTube and taking my views against Trump so much, but I think it's basically a bad move what he's doing. I think global trade wars doesn't benefit anyone, quite frankly, least of all the Americans as well. All this "Make America Great Again." Well, what it's potentially going to be doing is pushing the US market closer to recession, and if that's the case, then people are going to get laid off. People will lose their jobs. People have they have foreclosures on their properties. They lose their mortgages and so forth. So it's not good news. No country wants to be in a prolonged recession, and these tariffs, I think, just have sort of the potential to lead to to recession. One of the reasons why you're seeing the bond yields coming down at the moment. I'll show you some Fed fund futures rates in a moment about where rates are looking, but it looks as though the Fed might have to cut rates quicker rather than delay because of the recession fears. So I don't think it's good news. I think this time next year, if you're still watching me here on the Monday afternoon stream, I think this time next year we will be higher than where we are now, maybe in 6 months' time, maybe in a few months' time. But there's got to be some give, I think. Right. Okay. So the big movers last week, just a quick snapshot. As we said earlier, gold was up 2.5% at one point, up to 3167. And then we fell off a cliff, fell dropped 4.5%. So basically, it was down 6.5% really from well, it dropped. It recovered later on Friday, but it was down 4.5%, up 4.5% on the week. The S&P 500, the S&P 500 was down 11% on the week, bouncing back now as we speak, but massive move. They say, don't they, that an economy is said to be in a bear market if it falls 20% from a peak. Okay, so we have now seen a 20% drop in the S&P 500. We are bouncing a little bit today, but a drop of 20% since the peak. The Nikkei, the 225, that's the Japanese market, that was down 7.5%. China started this week down 10%, down 6% last week. The DAX is the German market. The German stock market was down 7.5%. And ignore that Bitcoin, because I didn't update Bitcoin, and that was last week. I haven't checked what Bitcoin did last week, so ignore that one. Dollar dropped 3%, but then has since bounced. So dollar is under a little bit of pressure. Right, okay, let's have a look. I'll come to the calendar in a moment. Let's just have a quick look then at some of these stocks. So I mentioned already that we've had that sort of big move in gold. I will talk about gold, I think, a little bit at the moment before we get on. This is my analysis. I'm going to give you my trade for the week later. I was in two minds whether to go with gold or oil. I'm actually going with oil, but I'll talk about that in a moment. But gold at the moment has had this bounce. It came almost back right down to this double top where we took our sort of lower band, and now we're having the bounce. I would have expected this zone here now where we've got this sort of drawn in sort of liquidity area that basically led to that fallout to be respected. And it is indeed at the moment. It's starting to get through here. So I'm going with the trend on this. If you look at the daily, for any of you that trade, well, any of you that have been following me over the years, you would be familiar with one of my sort of trademark strategies that I teach, and really got me out of a lot of trouble in 2005 when I was, because I came from the trading pits. I used to wear that jacket behind me there. If you don't know that already, I came onto the screens in 2005 and I lost a shed load of money. 2005, 2006, and I had to reinvent everything I was doing. And I reinvented it really by using this day trading strategy. I called it the naked day trading strategy. Naked because it basically strips out all of the noise, all the technical indicators. We're really just looking at support and resistance, and we're looking for price action candlestick patterns, of which this one here in gold, not over yet. It closes tonight, of course, but this is looking like to be a bullish pin bar, having touched marginally off that support zone. Missed it by about $10, and then we bounced right off it. This is quite a bullish little pattern. We need to get past here, but the fundamental reasons and the technical reasons that are moving out gold now, yet we've had that sell-off, possibly caused by selling to pay for losses elsewhere. Now that's basically, it seems to have happened, and now gold's sort of like, jumped, whatever it is from the bottom, jumped 2.5% today. I would expect gold to hit highs again. So I know we've got a competition that expires at 150 in about 35 minutes time, but it must be won't get there by today. But I wouldn't be surprised to see a retest of these zones. The central bank buying hasn't gone away. Stocks are out. People do need a bit of a balance in their portfolio. Inflation is likely to return at a much stronger pace than was expected. Gold is seen as an inflation hedge. The dollar is likely to come under pressure with the increase in interest rates, maybe sooner rather than later for the Fed. So that I don't see the dollar as really being, a currency that you'd really want to start filling your boots with just at the moment. So if the dollar comes under pressure, recession fears, gold, hedge against inflation, fundamentals take this higher. The technicals also take this higher. So not only is this a naked trend continuation trade, it's also a boomerang continuation trade. Okay, so we basically come back down to the previous level, and the way we trade this, there's more education on this at some point. You'll be able to get your teeth into it if you're so inclined. But it's just a basic strategy that I follow, that I use for following a trend and indeed reversals. It basically is a pullback. So boomerangs tend to come back before they go again. So I called it the boomerang a few years ago. Pulling back into previous levels of liquidity where buyers tend sellers and sellers tend buyers. What does everyone keep putting FTP in the chat? I'm not sure what that's about. If you think that's interaction, just by putting FTP in the chat, I don't think that's going to count. There you are. So the stop is going to be below the swing low. That led to the move higher. So this would be the swing low, led to the swing high, and this of course is the previous structure. So your stops are going to be low there. This for me would be, I would think, a reasonably solid trade to the upside. Okay, we've got that 3166 continuing to be our profit target, but a 1.5 to 1 risk reward on this, I think, is the way to go. It's been a lovely trendy market. You've had plenty of opportunities to get into this trend. 6% pullback. The fundamentals that got gold up here in the first place haven't changed. It's just maybe that sort of round of selling that's pulled it back. But I think gold has every chance of testing these levels again at some point in the future. Again, do not trade this. Do not place that trade on the markets now. If you do, you're being foolish. You've got to follow your strategy rules, and you've got to follow, the strategy religiously, not just because I've called a bias in there. Right. In a minute, I'm going to talk about some other assets that I've got my eyes on. Before I do, I just want to have a quick review of what to expect this week. Now, it's quite a quiet week in terms of market news. There's really nothing out Monday, Tuesday. One thing that you do need to watch out for this week are the Fed speakers. Lots of Fed presidents will be on the wires giving their views, and I think it's more important this week than most weeks because of the obviously the tariffs and what have you. So keep an eye on that. We do have Fed minutes on Wednesday. Again, Fed minutes basically tells you what their line of thinking was when they moved rates last time, and what their sort of outlook is for the going forward. We have New Zealand. That's the New Zealand flag. For those that don't know, always get confused between the New Zealand and the Australian flag, but that's the New Zealand flag. The official cash rate is expected to drop from expected to drop to 3.5% from 3.7%. Again, commodity currencies under pressure as we hit risk off. Risk off commodity currencies tend to come under pressure. Hi, Abdul. Hi. Good to see you in here in the room. I'm not sure why people are just typing FTP. I don't think that achieves anything. Challenger. You confuse us. What? CPI data this week, Mr. Andrew. Yeah, CPI. Yeah. So that's on and also we've got Arida speaking. Yeah, I'm coming to that in a moment. We've also got Arida speaking out of Japan. I'd like to hear what he's got to say about these tariffs. Of course, they've been trying to get their rates up with inflation. So we will be paying close attention to what Arida says on Wednesday. On Thursday, we've got consumer price index. That's basically inflation coming out, expected to come in, showing an increase of inflation month on month to up 0.3 on the month, which will actually see a drop year on year to 2.6%. But really, these are lagging indicators. This is like from a month ago. That's why the Fed do look at the CPI and the PCE, but they are lagging. And there's been quite a lot happen, as you may have gathered, since the last months of data was collated and collected. Yes, we'll look at the euro. So we'll certainly look at the euro for you as well. And then you've got Oida speaking again on Thursday. Friday, not a lot. We've got producer prices in the US. Okay, producer prices basically means what the interesting to see what these PPI happens, you know, now with all the tariffs going on their raw materials, but what their producers have to pay at the factory gate for their raw materials. Of course, that's the first line of inflation. If this ticks up, as it's likely to do now, you see that big swing around, then you're likely to see that being pushed down to the consumer, and then you're going to see PCE, and you're going to see the inflation numbers push higher. Just very quickly before we get on to the charts, and I will look at the analysis that you've mentioned there on the euro, because it's one I wanted to look at. But I just want to show you this again. Right now, you can get this; it's absolutely free. You know, hopefully you learn something from these streams, and that's what the idea of them is. But this is basically the Fed Fund futures rate. Okay, I used to work in the short sterling UK interest rate pit. This is the Fed Fund futures. It's basically telling you where interest rates will be. The rate, and you can get this by going to, if you go into Google or something, just type in CME Fed Watch. Okay, or you can play the stream back and get this URL. But just go to CME Group Fed Watch tool, and it pulls up this tool here. The next meeting is on the 7th of May. Okay, here's the meetings of the Fed. Okay, and here is the expectation. So at the moment, the current rate is 4.25 to 4.5%. Okay, so at the May meeting, the likelihood of them being at the same rates is about 53%. That basically means there's 46% chance that they're going to cut by 25 basis points. Then you go out to the June meeting, and now you're looking at rates really coming off a cliff. There's now a 50% chance that by June, there'll be 2 cuts from now. And taking it out now to the end of the year, look, there is 36, 40, 36, that's 67, 77. So it's about 75, 70, 80% chance that by the end of the year, there's going to be 4 cuts in interest rates. Now, this is normally the way that the Fed use interest rates is to control inflation. Okay, so it's a way that they can sort of reach one of their mandates to get inflation down to their mandate, which is 2%. Okay, CME Fed Watch. Yes, thanks very much, Azar. But now what's happening is that you're seeing inflation ticking up because of the tariffs, the Trump tariffs. So prices are going to be sort of upward pressure, but we're seeing rates coming down, which is not normally what would happen. It's happening because the Fed, I think the market is reading it, is that the Fed are more concerned about growth. Okay, so they need to keep the economy from going into recession, which will be disastrous. So they cut interest rates. So what do we take from that? Well, what we take from that is there's pressure on the US dollar. Okay, so pressure on the US dollar, not only technicals, Trump tariffs, and so forth, but also on the fact that the bond yields are coming down, which leads me to look at the euro against the dollar, because as we know, the euro is the most actively traded currency pair on the planet. Actually accounts for about 35% of all FX transactions is the euro against the dollar. So let's have a look at this for analysis. Now, my analysis is always the same. I always look at the top-down approach first. So whatever I'm asked to look at, I'll always look at the daily chart to see where we are on a broader picture. Okay, and I would say now we've had this line drawn in from last time we looked at this on the stream last week. Okay, so for me, the dollar is having a bit of a bounce at the moment. The trend is still dollar weakness, as you can tell. Euro gets strong, that means the dollar gets weak. This is a significant level intraday. I would go now to my 4-hour chart, and although I've got a longer term view of dollar weakness, here is a technical. In fact, if you're trading, and I know some of you do know what I'm talking about, but if you're trading the boomerang reversal, you would be short this already. Okay, so you hit this high into resistance, pulls back, goes again, fails to take out the previous high. This is a very easy to see structural correction. Stops go above the previous swing high and around there. This is how I would analyze this. So stops are above, I beg your pardon, the break of structure is there. Stops above the swing high. Profit target at the next decent level of liquidity takes you down to around this zone. So I would be and the fact that you've had this little doji 4-hour doji, having tested it, bounced back up, retested it, this is quite good confirmation for me that this euro dollar wants to move back lower. And I get 2-to-1 out of that, 2-to-1 risk reward using my boomerang reversal. Looking for this type of pattern where you have a test of resistance, pulls back, another go, but fails to take out the previous high. The swing low that led to the failed swing high is your entry to the downside, and the stop will be above the failed swing high. So that's basically how I'd be looking at trading that. It doesn't actually go with my fundamentals, but I know if you're trading the markets, you can trade with fundamentals or technicals. I think it's very difficult to trade intraday on the fundamentals, because what should happen doesn't always happen. So for me, intraday trading, it's the technicals for me. So technically, here we're going to see some euro weakness and some dollar strength. So Kibo, I got a 5-to-1 risk reward on the euro sell. Divyansh, great analysis, but will not take this TP. Okay, bearish pressure, says Kyan. Yeah, I agree. Calvin says Federal Reserve announces emergency closed board meeting for today. Okay, so yes, I was coming off my screen today. As I was about to say when we were talking here about the about this thing, it happened last year where the Fed cut interest rates before a meeting, and what Calvin's just said there is very interesting. Closed board meeting in the Sunshine meeting notice. What does it say? Advance notice of a meeting closed to the public observation, pursuant of something like that. So it's possible that they can cut rates. I don't think they'll do it today, but it's possible they can cut rates, outside of a scheduled meeting. Yeah, well, we'll see. But only technically, I would take the euro dollar weaker. Why are all markets crashing, disrespecting all correlation between them? Some of them should be up according to their relation to the DXY. Yes, I mean, you're very true. Very true. I mean, the rationale behind some of these market moves is really pretty, why has that crashed? I was going to show you my momentum meter. Let's see if I can reload it. Let's have a look here. Yeah. Okay. So look here. This is the currencies at the moment. This is the daily chart. Okay. So this orange line is the Australian dollar. The grey line is the New Zealand dollar. What are they? Well, they are commodity currencies. I'm not sure why the bloody loony's up so much. It's coming down today, but the Australian dollar and the New Zealand dollar are under pressure at the moment, and the main beneficiaries of that weakness are these currencies. The Swiss franc and the brown line is the Japanese yen. Who remembers me talking about Japan, Aussie yen a couple of weeks ago? Aussie yen now is performing really well to the upside. In times of uncertainty, money flows into the Japanese yen. Okay, basically it's a safe haven currency. It's a low yielding currency, deemed to be less risky. So obviously money has to flow somewhere, Japanese yen. There's repatriation of yen because there's an unwind of risk assets. So without getting into too much detail, and I know I'm going to lose people here, but in terms of risk on, traders borrow money, and they borrow money and sell that. So they borrow the yen because it's cheap to borrow, and then they sell the yen on the currency exchanges to buy the assets of the countries that they want to buy. So the yen is a funding currency because it's very cheap. When that all turns around, then the yen basically gets bought back as it all gets basically repaid. It's called the carry trade reversal. Okay, so the yen is performing well at the moment, which is only to be expected. I was going to look at the Aussie yen, so what better time to look at it than now? Okay, let's have a look at the Aussie against the yen. We've got about 10 minutes before we announce the gold winner. Aussie yen. Okay. So top-down analysis. We had this line drawn in, this band of resistance drawn in from last week. Now, the fact that this double top here has failed to be breached, big level of resistance. Look left, it's bounced off it here, bounced off it here, rolled off there, rolled off here, back up to test with this long wick candle. I mean, it's not a perfect setup, not a perfect setup, but the fact that failed to take out the previous high, once you take out these lows, yeah, these failed higher lows, failed to take out a new high, basically means these are weak. We break through there, back up to retest, the writing's on the wall. And I know it's hindsight and we can't get onto this trade now, but the Aussie yen, I think, continues on lower. The predominant trend is lower anyway. As you can see, daily chart. Again, always have your stops in place. You'd have your stops above the swing high here, above this resistance, and quite frankly, your target level. I mean, we haven't been down here for. Again, looking left, guys. If I didn't trade this, I know I spoke about it a couple of weeks ago. But had I been selling up here, I'm not just saying this because it's done it, but had I been selling up here, I'd have asked you to look left and tell me where you think your first level of support could be. Well, look here. This top, this bottom, you've got to put in that as a level that's not just you and I looking at it, but institutional money. And just taking that across, you can't. This is technical analysis. I know if you look at so much in the chart, you can always find something to fit the narrative, but this is just perfect in terms of the bounce level. I think we retest it. I think 50% of that move, 50% of that move would maybe get you out or get a selling trade at
Navarro saying stock markets will recover.
Stock markets will recover. Who's saying that? Trump trade advisor Navarro. Yeah, says stock markets will recover. Oh, thanks
Navarro
very much.
Says market is trying to find its bottom.
Trying to find its bottom. Yeah, tell me about it. I do have quite a few.
Adding, any talks of recession seems silly given expecting tax cuts.
Oh, right. So the teasing of tax cuts, yeah. So 50% of that move would get a short coming in around the 90 level. So if we get back up to this, it doesn't fit in my strategies, my boomerang, but I'm just talking about the technicals. I would be surprised to see if this pushes up. Well, I think here's your setting level, yeah. Certainly when you get back up there, so your stops are going to be above. But I think for the pullback coming in here at the moment, I'm not quite sure why it's putting back. Let's just have a quick look at the momentum meter on the lower time frame chart. 2 hours doesn't really matter, but 1 hour I like to look at. So what's happening here is that the Aussie is recovering, but yeah, you would be a little. I mean, you got the yen trading lower as well, so Aussie yen is the biggest sort of mover at the moment. Pound's under pressure, but the commodity currencies are getting a bit better. I think the commodity currencies are going a bit stronger because of the sort of feel. The feel at the moment that the tariffs are going to be maybe. Something's going to happen on them, and maybe stock markets will bounce. We'll see. That's why I think these commodity currencies are taking a little bit of a stronger move. Okay, so if you want me to look at anything in particular, then please do drop it in. We have got about we've got about 4 minutes to go on the gold giveaway. Before we do that, I just want to have a quick look at my. Because I was looking at different asset classes and what have you for my trade for the week. Again, don't trade this, but my trade for the week, and we'll talk about it next week, rightly or wrongly. My trade for the week is going to be WTI, which happens to be the oil prices. Okay, so the same type of analysis here. My target for oil is going to be using this extension zone of support and resistance. So if you look at this zone up here, where we've respected as a support zone, I mean, come on, guys, this is so strong. This level up here, yeah, you can see it there. The further we go, look, this is a big level. Bounced off it here, bounced off it here. Thought about it here, maybe a day. Double top. Off again.
Dumping of seafood and other goods.
2 tops. This is at 73, something like that. To the low here of 65. That basically is that level there. So I think the fundamentals are taking oil lower. Fundamentals, if you follow the fundamentals, you may be aware that OPEC have basically announced 3 times their output for next month. The Saudis have basically lowered their selling price, which basically is, I think, to try and screw OPEC over. But basically, you've got so many forces affecting oil to the downside. You've got the recession fears, global recession. People, economies are not expanding. They don't need as much energy. You've got supply fears coming out of OPEC. And you've got price dropping coming out of Saudis. So there's 3 fundamentals that are driving oil prices lower. Fundamentally lower. Technically, it's a sell. We're getting lower lows and lower highs. We've broken through the support zone. I think a retest of that. Well, here's my target. Is basically going to be back down at around the sort of the 50 zone. So this is going to be my target for the week, for next week, and we'll talk about it when we come back on. You can. I'll tell you what, I'll even week.
Ease Wonderlane says US tariffs hit developing nations hard.
That's my week target,
So
and it's going to be
Brussels. See if we can try and find a video of her. We'll put it up.
57.50.
Wonderlane saying that we are ready to negotiate with the US on tariffs.
Hey, negotiate. That's the EU's von der Leyen saying that they're going to negotiate on tariffs.
Let's keep an eye on the S&P 500, seeing a bit of movement towards the upside here. The euro, a little bit of strengthening as well, a little bit so far.
So the euro S&P 500 is bouncing by those things. Anyway, so there's my target. We're having a bit of a pullback at the moment. Where would you look to get in? Well, you know my analysis.
Wonderland saying that we are ready for good deal, but ready to take countermeasures.
Yeah, I mean, for me, the fifth, it's not a boomerang, so I can't call a boomerang on here. Maybe I might get a boomerang out of the hourly chart. Let's have a look if there's an entry on the hourly for us on this pullback. Let's have a look here.
Andrew, here is your reminder. Gold close.
Oh, gold is closing. Let's have a look.
Andrew, here is your reminder.
I'll come back to WTI entry in a
Gold
second.
close.
All right, gold is closing now at 50, so that's now closed. And I'm not moderating this, so back office, my back team, Josh, who you see on the podcast now and again, will be putting out the winners very shortly. Right, I'll wait for your prize announcement soon, Josh, when you look at all the answers.
And non-tariff barriers.
So, okay, so back to our WTI.
For the lane, saying that we will focus on 83% of trade.
57.50 is my target. See if we get an entry in here. Well, not really even on the 1 hour. If I had to call it, I'd say 50% of the pullback of the breakout of this structural break. Definitely had a structural break there on the 1 hour. Okay, so 50% of that move. Let's have a look exactly what it is rather than me guessing it. So the 50% pullback would see an entry in line with this bit of price action here. So if it carries on putting back 62.50 for an entry, don't trade it. But a pullback to there for trend continuation higher.
Says trade partners zeroing tariffs is the first start. We have posted out the video live feed of Wonderland currently speaking live.
Please announce the winner. Yeah, well, we're waiting for the winners. Tell me if I'm lucky. I don't know who. Did anyone think they won? Does anyone think they got it close? And obviously it will be checked. Gold was 302, 30. What is it? 30. I think they might have to announce it via email. Let's have a look here. All right, there we go. Congratulations. There you go. You were the closest guesses. Congratulations to Eze. Played well on Saturday for Crystal Palace. And Praveen, you were the closest. So you have got yourself a $12,500 assessment account for absolutely turning up and getting a little bit lucky, I guess. So well done to you guys. Congratulations. Presumably we had the drop, the coupon drop. Coupon drop came in earlier, I think, did it?
So last flats at about 6.7% after ease one.
Did we do the coupon drop?
Ready to negotiate with the US on tariffs.
We didn't see it.
Long-dated UK bonds drop, 30-year yield rising 10 basis points to about 5.
Congrats.
Also, just a bit of color with Navarro.
Right. Okay. So looking at gold higher, looking at oil lower, looking at Aussie yen lower. Let's have a look at the stock market. S&P 500. Okay. So this is the top 500 companies. Naturally, the target for here is going to be the Friday gap. Okay, we're not far from it now. Someone was saying in the chat the other day about gold. You know, when the gold was to bounce, it's going to have an aggressive bounce. It sure did. You might see this happen again in the S&P 500. You've got a bit of price action on the lower time frame charts. We've got this is marginally a boomerang reversal. What do I mean by that? Trend is lower. Yeah. Hits the low down here, pulls back. This low fails to take out the previous low. That is your break of structure right there, where we are now. Okay, so this low here, failed to take out the previous low in a downtrend. You need to find that really at a good level of support, and I don't know if it is at a decent level of support. Well, yeah, it is, isn't it? We spoke about that. So yeah, that's your support zone. Oops, daisy, excuse me. Top gainers, thank you, FTP. Thank you very much for showing up. Hopefully, no, the code drop was, you can use that code drop twice. No, you can use, it's the one code drop for 2 people. So there's no more code drops now. Good, Robin. I'm pleased you like it. Well, it's a bit of fun, isn't it? Bit of fun, bit of engagement. That's what it's all about. Tell your friends, come over. Chance to win free assessment accounts and get, enjoy the the community. That's what it's all about. So the S&P 500 on the daily in support. Okay, this is literally a break of structure at that support zone. Your stops are going to be below the swing low, which happens to be almost the low that sort of moved down. The gap is going to be, it's going to be the first target, but I still again think,
did move towards the upside.
Again, I think this has got potential to move higher. Move higher than that gap close.
We are open for negotiations.
Well, my strategy would tell me to buy it. My only problem, which is why I most probably won't do it on my accounts, is because the gap target, right? The gap target doesn't really. I need my stops below here, yeah, for my strategy, right? So I need my stop below there. One of the hardest trades in the book is not trading when you see a perfect setup. And the problem here is that you're going to have, I think, resistance coming in at around 50.37. I need my stop below. It gives me 0.8 to 1. Sorry, 0.8. Yeah, 0.8 to 1 risk reward ratio. I don't like that type of risk reward ratio, especially on a reversal. It's not something that I would be happy to take. But there you have it. Right, in a moment we are going to announce the winners of the final 2 $12,500 giveaways for the most interactive in the most interactive in the chat. So we're just waiting for that to come across. So stocks potentially having a bit of a small bounce, but don't get too excited about it. Here we go. Okay, so there you have it. Azar Trades is the final winner of the stream. So well done to you for your activity. And there you have it. Well done. Good stuff. Congratulations to your good self. Just tag Josh. Don't other people tag Josh just for the sake of it. Just using it for your to collect your prize. Okay, well, you got my views at the moment. Stocks are bouncing, but don't get too excited about it. Yeah, I would be expecting a gap close from a lot of the indices, including the FTSE. Big FTSE gap to close. Big DAX gap to close as well. The DAX. Oh, look at this. This is the DAX last time, yeah. This is the DAX that we spoke about last week. Break of structure. Trades lower, stops below. That would have worked out nicely. Let's take that one off now. But the gap in the DAX is going to be challenged, I would have thought, and see where we go from there. Right, folks, congratulations to all our winners. Hopefully you enjoyed the content. If you did, I'll see you this time next week, 1 o'clock London time, which is 8 o'clock US time. You can work it out with the rest of the world where you are. We'll be on at the same time. We'll look at the week gone by, the week coming up, some trading opportunities, and we'll be giving away some free prizes as well. Oil is my top pick for the week. Lower. Okay, folks, thanks for tuning in, and we'll see you next week.